Cheers. Bink. Pull myself in. And we pack. Alright, guys. We're back again with another trade breakdown. Let me readjust everything and make this the start of the video. So today I want to go over the trade that I took on the S&P 500 and go over top-down analysis as to what I was thinking going into today's trading day. Now, we're starting off on a daily chart, so marking this off blank. If you want to do what we did before in the past, mark up your annotations before I start marking up my own, do that now. But let's go into me marking off the charts from scratch. So if we look and locate how price started for the week, here is last week on Friday. We had a previous daily low SMT divergence set in down here with the Dow Jones here, just like that. So kind of coming into this new week, we kind of expected price to continue higher based off of last week's Friday close, because last week's Friday close did what? Expanded. Then Monday consolidated, and we created a daily bullish fair value gap, as you could see. Now, since we have all three assets tagging the daily bullish fair value gap, there's no SMT divergence on this particular time frame. But just because there's no SMT, that doesn't mean that I'm not going to still be able to frame a trade based off of what this daily chart is telling me. I could still frame a trade even though we have no SMT on our higher time frame perspective. I still want to try and capitalize on the intraday move. So I'm going to reference and utilize 4-hour or hourly time frames. So I kind of wanted to see what is going on inside of this daily bullish fair value gap, and if there's any sort of way that I can capitalize on this move moving into today's trading day. So let's go down to the hourly chart and look to see how the next day forms for Wednesday the 27th. All right, now looking at our hourly chart, what is one thing that we can notice between these three assets in the triad? So as of right now, if we look and pay attention to the difference between Monday and Tuesday's low here, there is actually an SMT divergence set in, resting at the Monday low and the Tuesday low, with the NASDAQ, the S&P 500, not running that, while the Dow Jones does. So in my eyes, that displacement higher that we had on Tuesday, this was price starting and initiating that market maker buy model to clear out the external highs from that daily chart. This is the external high on the NASDAQ. This is the external high on the S&P 500, which in my eyes would be a daily objective point, draw on liquidity. Now, I have the hourly chart marked off from the 8 o'clock time. I don't have anything else past 9 o'clock, 10 o'clock, and into the New York AM and the PM session. So I want to see what happens here from this hourly perspective to see what I can do next at Equities Open for me to then get a read for price next. So I'm going to skip one hourly chart because as of right now, what are we doing? We're kind of like Asia consolidation, London slow movement. We kind of want New York to do the damage to then give me an idea as to what we could do next, because I don't have any sort of SMT set into place right now, besides like some small SMT set in at these lows, but I'm not really too confident in that as of just yet. So let's skip one hourly candle just to see what price does. All right, so including in this Equities Open time, what does price do? NASDAQ acts crazy weak. Dow shows crazy strength. S&P 500 is somewhere in the middle. Now, I'm going to say this, and I'll mention this one time. Notice the candle closures here on this hourly chart. Notice this candle closure here. Notice this candle closure here. What is the difference between price and these two candles here? This is a down close. This is an up close. That is a divergence in itself. Shout out Trader Day. So as of right now, with this indication between the two assets here and also the Dow Jones, we can anticipate that that 9:30 open on the hourly chart was a manipulation. As you can see, we're still within this hourly bullish fair value gap on the S&P 500. This is the asset that I took the trade on. And we are still in that hourly gap from the Dow Jones. So the NASDAQ was the one that created a deeper dig, clearing out inside of this candle low from yesterday. Now, we failed to take out that low on the S&P 500, making the higher low here, which ended up being that low from the AM session. Now, what I did from this point on, once I noticed that, I went to a 15-minute chart because as of recently, we have been having very lethargic moving price action past the open this week. We had very weird price action from Tuesday, and we had weird price action from today past the open. And I didn't actually execute this trade until 10 o'clock because I wanted to see how price confirmed and how we closed on these candles. I was paying very close attention to the S&P 500 here. I'm going to make this bigger, and we're going to go over the analysis behind here. So we actually had a short-term low resting here that was ran by this down close candle, and we closed above it at 9:30. And I was saying to my Discord when I was live, I was like, this could be a point for you to buy the S&P 500 and long it to the daily external high, because if you look, the risk to reward would have made sense buying at that down close candle there with a stop loss at the candle low, or you could even done the candle body low here and then targeted the daily external high. And even with that point in mind, you could have got a 2.33 risk to reward. Or even if you did it at the low, you could have got a 3.32 risk to reward, which was very, very nice. The 5-minute chart looked very nasty, in my opinion. Like, this was more so of a barcode, which is why I said the lower time frames you go, the more noise that there is. The 15-minute will always give you clarity, and also any time frame above that, it will remove the blur. Like, the higher time frame narrative was clear. It was a continuation to trade higher to take out the daily external high. Now, all we're doing is trying to frame our way into the trade from our intermediate or lower time frame perspective points. So at the next 10 o'clock candle, I wanted to get in and frame my trade, and I positioned myself. Once we had that good candle closure here, I bought the opening wick of that 10 o'clock candle resting right there, which was also aligned with 5-minute breaker blocks, as you can see here, closing above this down close candle that aligned with that 15-minute OB. And I had my stop all the way down here. So if I go and I look at the NASDAQ as well following suit, what is the NASDAQ doing? NASDAQ is actually building like a nice V-shaped recovery. And I saw a lot of you guys actually taking this exact trade on the S&P 500 and on the NASDAQ. Everything was offering in regards to the forever model execution. A lot of you I saw took this M5 down close candle here that we closed above, and we printed that forever model order block just like this. We closed above these down close candles, but this down close candle ran that short-term low. This was a good buying opportunity. It was a nice V-shaped recovery from that steep drop lower. The bias was just to continue in longs. It's just the way that the market has been delivering these equities opens has been difficult. And unfortunately, it's just the way it is for it being the end of the month and the end of the quarter. But you guys will see that we actually ended up reaching that final destination draw on liquidity. My actual execution was roughly at like 482.5. So it was like this with my stop loss at that candle low from the down close candle, that order block at 5.75. And then I targeted the daily external high just like this. So this was my execution. So I'm going to play out price and show you guys what I was doing. At this point, at 10:15, when we had that big rip higher taking out the Asia highs, what I was doing here was I was jamming my stop to do what? I jammed my stop to the 10 o'clock candle low just like this. Now, why would I do that? Because all I'm trying to do here is from that 4-hour candle here. We closed as a down close at 6 o'clock, coming into the new 10 o'clock candle. But also, what did we do on the Dow Jones? The Dow Jones closed as an up close candle. This also is the same thing as what I showed you guys on the hourly chart. Closing as a down close candle here, closing as an up close candle here. Another point of divergence between price delivery. So if I go back to my 15-minute chart and I show you guys how price ended up delivering, we did have a steep retracement lower, edging us at that high, unfortunately. But this dropped lower. So what did we do? We traded into an hourly bullish fair value gap, as you can see here. My stop loss is still protected, and I'm very fortunate for that because I was literally just shy of being stopped out break even from this position. I almost got stopped. I was literally 1 point away from being stopped break even here. But then eventually we ended up reaching and meeting our final destination, take profit, just like that, for a 14 point or 13.75 point return on that entire move. So this move kind of went accordingly as to how the NASDAQ played out yesterday with those longs that we took as well. But again, like a set and forget position, and then all you need to do is let the trade ride, let it breathe, put your stop loss at a point that makes sense, and see what happens from that point on. But I hope this was simple enough for you guys. I hope you enjoyed the trade breakdown and you are progressing. You're learning more and more each week that goes on. And you see the simplicity as to just developing a narrative to the execution behind price delivery. Very simple process. All you guys need to do is just stay consistent with the rules and you will be fine long term. And I hope that September clears up everything and we start getting some nice trending markets and we can end up capitalizing on high probability setups week by week. Anyways, like always, guys, like, comment, subscribe, and let me know next what you guys want to see in future videos besides just trade breakdowns. But take care, good luck, good trading, and I'll talk to you guys again in the next upload. Deuces.